All right, team. Very good morning. I hope you're all doing well. Had a lovely weekend in the sunshine. I hope Monday, the 8th of June, 2026. So, what do we have today? Let's start where we always love to begin with the DXY. Good morning to you, Claude. I hope you can hear me. I think my sound is working. It certainly should be working. Good stuff. So, DXY, where are we? Well, we are up at those highs within that weekly. Let me check the chat. Perfect. Thank you very much, Claude. Up at the highs in that weekly order block. Of course, still expecting a turnaround from that higher time frame weekly order block. If I bring your attention to the top right-hand chart, we can see that is the remaining order block up at those highs. With that said, I do see, as I've mentioned in some of my analysis post this morning, I do see a bit of conflict, and it does stem from the DXY. And that conflict is coming from the fact that although we are in that higher time frame order block, I can already seek to understand where I could well be wrong. Higher time frame price action is not something that I'm really interested in, but as I always like to say, when it's very obvious, it's difficult to ignore it. So, what I mean by that is, of course, at some stage in the market, we were looking to make lows, potential lower high for what we would expect to find then a lower low continuation. We were unable to have that, and in fact, we just retested these bottoms. And as a result of this push, in my opinion, we've broken structures to the left. So in this position here, we've now made a new high. And then after a high, I'm expecting a higher low for what could now be a higher high continuation. And now I ask myself, well, if I am wrong, that weekly order block should provide liquidity from the down or to the downside, where could the high look to take me? And would that make sense for the DXY to continue pushing bullish based on the fundamentals? Perhaps. However, so this is a thought process that I'm sort of trailing against my a technical bias, but the technicals also make sense for this position to push towards the highs. But with that said, until I have a weekly candle close above that higher time frame weekly order block, I am going to still refer to that weekly order block and expect with liquidity towards the downside. So of course we look to refine those order blocks down. We're now within bottom right hand chart that daily time frame, and then we're in the only remaining daily order block at the moment. So we're pushing towards those highs. Here is your order block refined within the area, and of course looking for a rejection to come from within or around the liquidity within that area to push price down to the downside. So now to the 4 hour time frame. Still refined within the weekly, refined within the 4 hour, excuse me, the daily time frame, and now within that 4 hour time frame. If I zoom out, you can now look to understand why it would make sense to locate price to turn around within some of these areas. So we've got this 4 hour order block. Why? Well, refined within the daily, or at least above the daily, just about. There is that 4 hour order block that in the market caused price to make that push towards the downside. So, of course, when price eventually returns back to the order block, that's why we're expecting liquidity to come out of it. That's why hopefully then we'll use the DXY for confluence for a cross pair. It would be a long position across the cross pairs based on DXY seeking to, if I can get my words out today, seeking to roll bearish from that area. Now, the conflict then stems as we start to go through those cross pairs to understand, well, would it really make sense to take pretty much immediate looking long positions on those cross pairs? At the moment, I'm still yet to really come to the conclusion whether it would make sense. However, on the DXY, as a result of still remaining bullish, before I am looking to use that DXY as confluence, I do need to seek some breaks of structure. So, structure point in the market. From here, for a good example, I'll be looking to see if price is going to break that area, then return hopefully to an order block up at the highs left as a result of that break. So, very textbook kind of stuff. Now, the final conflict that I'll place on the chart is the fact that if we look at basic price action, the most recent high in the market was caused by this area. Therefore, here is a higher low in the market that is confirmed. And therefore, if I draw price action in its most basic form, higher high, higher low, higher high, which is essentially this, what we would really expect to be broken in order to have the confirmation for DXY weakness is a break of that most recent higher low that caused the high. Now, as you can see, waiting for that would mean waiting for this to be broken to the downside, which would also mean a daily candle. Oops, if I can get the correct tool, a daily candle to break below that area for us to really have that confirmation that indeed we are looking to roll bearish based on the technical analysis. However, this, of course, now, in contrast to what I'm saying, would be an aggressive type of break of structure based on brand new price action that we can only see has developed from last night. So, with that all in mind, so of course, higher time frame bias, expecting weakness to come out of that order block. We can understand reasons why we could be wrong in terms of getting the weakness coming from that order block. We are going to wait for the entirety of the week because we need a weekly candle to close above that order block for me to have the confirmation that I am wrong. Therefore, the bias will be DXY weakness for the foreseeable, just for now. With that said, it doesn't mean immediately looking to short the DXY. What it does mean is understand that this is the key structure point in the market, understanding now that this is an aggressive break of structure as a result of not having this type of break of structure in the market, and that will have to be the play, unfortunately. So the DXY, it looks clean. We can understand why we have those turnaround areas. However, in the immediacy, we still must be quite open-minded and understand where we are in the market and the fact that we are very bullish rolling into that higher time frame point of interest. So that's the DXY, long story kind of short. And then with that said, we'll head over to UJ first and foremost. So we're looking at very similar looking price action on UJ. So let's use the analogy of being half glass full as opposing to empty. If we are correct in the bias, of course, a UJ short wouldn't go amiss. It would look quite nice based on what we have also here. Higher time frame weekly order block, which in fact I'm going to have to get rid of as a result of last week's weekly candle closing above. So my mistake. However, with that said, when we seek to refine areas, so therefore the analysis now begins from the daily time frame because I've got nothing to use now on that weekly time frame aside from this wick imbalance, which I will put on the market because, or on the chart rather, because it does count for good confluence. As we will see if once we start going through the other pairs, I think it was AU, perhaps Ruben GCAD last week. The wick imbalance worked perfectly in terms of a short position. Therefore, this is how I'm going to look to approach UJ at least for today. So, daily time frame, we'll have a look at that. We can see in the market that price was pushing up to an area. We ranged for a considerable amount of time, and then we had this incredibly large bearish engulfing candle. That engulfing candle left us with an order block behind where price is currently trading at the moment. So, of course, once we have that bearish move from an area, an order block selection, I am expecting some liquidity coming out of the market. In terms of price action, however, here becomes a conflict again based on the DXY. As a result of this move to the highs, breaking structure to the left, we're now in territory based in terms of the higher time frames. We're looking at higher high, higher low, potential higher high continuation. Would that make sense? Well, that's the same analogy that I have for the DXY. So I'm understanding what could go for me. I'm also understanding what can go against me. And I just have to understand that that is the risk in trading. Now, does that mean that I must take an immediate short position now on UJ because I'm in a higher time frame refined point of interest? Absolutely not. I can understand that even on the 4-hour time frame, regardless of coming back into this area, we are bullish. Therefore, I must wait for something different to happen in the market before I can have the confirmation to sell. Refined within this daily order block, we have right up at the highs where I like to see it and where I like price to gravitate towards. In fact, I'd love price to push up slightly higher. And then when you can see that on the lower time frames, i.e. the 15-minute, we can see that there is that 15-minute order block right there up at the high. So we've got good range at least if we would stick to the 4-hour time frame for a moment. We've got good range to short down to the 4-hour 50 MA. And then the question is, well, why are we only going to look to short down to the 4-hour 50 MA? Well, if you look at the performance of the 4-hour 50 MA, price is respecting it beautifully. So therefore, if I'm going to get into a short position, I'm going to need to want to manage my position at least, well, on the way down to the 4-hour 50 MA because I am indeed expecting a rejection potentially to the upside. Then I ask myself the third question, why would I be expecting a potential rejection? Forget about the 4-hour 50 MA. Well, as a result of them making higher highs and higher lows, my higher time frame is telling me that perhaps, Charles, you could be caught offside here, and that the higher play or the better play would be continuation longs based on the DXY actually fueling UJ towards the upside. So I can quite understand why I'd need to get out of the market at that time, or at least move my position to break even, move my stop loss into some profits. So we see the market, we can understand, just like the DXY, how we could be wrong, but nevertheless, we can understand where positions could be taken. So if I seek now to refine this 4-hour order block down, in fact, before I go to the 15, let me just zoom out so you can understand a better area in the market where we could expect to turn around from. So this is UJ completely zoomed out. If I can bring that full screen, that will be a better play. So we are currently here. We've had that move from the to the lows. We're looking to manipulate this order block. But look at where, if we are wrong, I don't mind being wrong. It just allows me to take a further position at some point, potentially from a better area. Now, if we look to the left, look at this move that happened on UJ. Therefore, as I've said previously, when price starts to gravitate back up towards that area, I'm expecting perhaps not the same degree of liquidity that pushed price down to these lows anyway, but I'm at least expecting to, I shouldn't use the word expectations, but I have in the back of my mind from this point of interest, there is a high probable chance that I can at least move to break even. And that's the goal at the moment. Well, every moment, to be quite honest. I can move my position to break even based on the liquidity coming out of the area. And that's the trading mentality that I personally have. So therefore, we can understand if this point in the market is incorrect, that's fine. There is certainly a much better area or another alternate area up at those highs where I'm looking to take a short position from. Now, in terms of taking a short position now, refine within this 4-hour order block that we're in. If I bring that back so you can understand why I'm looking here, we have a 15-minute order block. I'm going to have to zoom out again for this. Right there up at the highs, just where I want to see it. Therefore, I'll be looking to short UJ from that area. So, preferentially once price reaches to that area. If it happens sooner, then I'll have to, as in if a break of structure happens sooner, then I may well have to reanalyze the market. What I mean by that is here's a structure point in the market that of course causes the most recent high. So here is a valid high and low, therefore it is a structure point. I'll be waiting to see if I can get a break of this structure point, pull back up into an area of interest that caused that break of structure, look for my entry criteria before a short position down. So that was kind of be the worst case scenario, that price doesn't actually come into the refined point of interest in that 4-hour time frame. The best point of call is price comes into the area. As price starts to move higher, we can then see the developed higher lows. Price taps into that 15-minute order block, hopefully pushes towards the highs, break our most recent higher low, or even better, a key structure point in the market that we can identify, and then pull back up into a point of interest, look for the short. If, for example, price, now this would be the worst case scenario, if price just gravitates straight away up into that 15-minute order block, doesn't break any structure points to the lows before or after doing so, and of course that's the question that we have to ask ourselves. Is it now a good time to take a short position? There would be an aggressive way to take that trade, of course. Now, what I'll be looking to do is straight away head back to the DXY to see if it makes sense. If the DXY is perhaps in and around these areas or even slightly higher, then it might be worth the risk. But at the moment, I'm still yet to decide if I would look to take that position slightly sooner rather than later. But certainly moving from the weekend closures into Monday, just to get a better, bigger picture rather of what price action would do, I would certainly look to suggest waiting for a break of structure. So even when price comes into that area, I think the better port of call is to wait for price to move. Allow price to go without you, or so much so it seems price will move without you. If I head back to UJ, it would seem as if price is moving without you as price starts to come up into this area, starts to make its move short. But actually, even if you have that break of structure, that's your confirmation that, okay, the point of interest is very much so valid. It's a long trading week, long trading month, a long trading year, and it's going to be a long trading career. So if you're able to wait for a structure point to be broken, regardless of price coming into your points of interest, simply wait, sit on your hands, wait for price to come back up, and then you'll be able to take a much more confident short position. And so that was UJ at the moment. I better put an alert with UJ coming up into that 15-minute order block, and I'll place an alert if UJ seeks to break some structure points to the low. So I like UJ. Don't mind shorting that at all. We'll just see how the cookie crumbles as we start to move through. Now, while we're on the topic of discussing points of interest and being patient, let's go to AU first and foremost. So AU, I was looking to short AU pretty much as soon as price came into that weekly order block some weeks ago. Now, I I was able to short AU a couple of times, but most recently I wasn't able to do so. And I've left these 4 hour order blocks on the chart for you to see, or for you to gain a good example of what I mean, even for you, Jay. Price comes back up into or wait for price to leave, wait for price then to return and take a very confident short. AU, something that I was anticipating the move towards the downside for weeks. In fact, it could have even been over a couple of months based on the fact that we are trading out of top right hand chart a higher time frame weekly order block, of which caused price to make a move to the downside. So, like on every other pair that I've just described, once we have a move away from a point of interest, expecting price to come back up into that area, give me a lower time frame shift once I've refined those areas down, and I'll be happy to take a short. So that's the weekly time frame spoken about. We have very good range on that weekly time frame as well, down at least to the 4 hour, or rather last week I'm talking. We had good range. Price was still yet to close below the daily 50 MA. So that's what we didn't like. That was a conflict in the market why we weren't really able to take any positions that weren't from our better areas because price was at the daily 50 EMA where we was expecting potentially a rejection from it. And if I put this area back in the market here, we can see that we had this bullish structured area in the market as a result of, again, despite me believing that price is looking to roll short from that higher time frame weekly order block, I had to understand the phase in the market that price was still in on AU, and we were very much so still bullish, respecting these lows, and more importantly, we were still respecting that daily 50 MA. So I was expecting rejection to the highs, despite having the technical ability to recognize price would look to short from that area. Now, where I'm going with this is I wasn't able to short AU because, and I've still kept my best points of interest on there, price didn't return. And that's fine. If price didn't return, there was no setup for me. Therefore, it's a new week. Will price look to return at some point in the near future? It more than likely probably will. So it's just a bit unfortunate, slightly annoying, but that's the way price action goes. That's trading. So trading consistently just means await your setup or have your technical analysis complete, await your setup, set your alerts, and wait for your alerts to go off. That's consistent trading, as opposing to me chasing AU, recognizing that I understand AU's likely to roll short from that higher time frame point of interest. Instead of chasing price action, I just had to wait. So I get to the charts on Monday. I see the move, of course, it's taken place. That's pretty much the short position that I wanted to take, hoping that price would return from these areas. So now we reanalyze and see what we have. So all the same bias or all the same confirmations that I've just spoken about are very much so still valid. However, we have better confirmation now. This bullish structure on the daily time frame is now broken. We now have a candle closure on that daily time frame below the daily 50 MA. So everything now is aligning beautifully for a short position once price gets there. So that's the short pretty much taken care of. When price gets back up to these areas, I'm going to be very aggressive. I'll go down to the 1 minute time frame pretty much immediately to seek that 1 minute structure. And just as I've described on any other time frame, I'll simply be waiting for a break of structure, pull back into a point of interest, and I'll look for a short. So I say 1 minute break, because I would say 1 minute at the moment. That's just my mindset based on the fact that I feel like I have missed AU. So I'm very much so a normal person trading the market. But more than likely, what I will wait for is a 15-minute bearish candle closure, because I can definitely wait for a 15-minute bearish candle closure from an area. And I know how to manipulate that 15-minute candle. As soon as that 15-minute candle closes, I could look for price to return into the imbalance left behind from that 15-minute candle. I can seek to understand, well, we now have full confirmation as a result of this is quite old price action by the time price looks to return. So there's many ways to take the short position. I'll certainly go into discussing that as and when price returns. So for now, going to put an order block up at those highs. That is the best looking short position that I could seek to take as we speak at the moment. And if you see these 15-minute order blocks that I wanted price to return to, simply never came back. We had one return, but I wasn't happy to take the short just then. And then price failed to come back. So where are we in the here and now? As a result of believing or technicals telling us that we could have a short move on the DXY, I should ordinarily be looking to take maybe, let's say, a long position on all the cross pairs. That would make good sense. DXY weakness, cross pairs will seemingly be acting in a bullish kind of sentiment against a weak dollar. However, I don't really see at the moment any place where I would be looking to take a long position from on AU. So again, it's not unfortunate. It's just that the technicals are telling me, well, there are very good positions to take long positions from on AU, and there are also positions that I can pretty much fabricate. So I can see that there is an order block here, but it is just an order block at this time. But what I can see almost immediately is that price has broken that order block down to the downside. Therefore, this order block is now invalid. Then it's down to me to say, okay, well, do I just continue to repeat that process based on the order block selection? Ordinarily, no. And it's not something that I am willing to do at the moment. But what you can look to do, or what I could definitely look to do, is place it in the market, refine that area on the lower time frames, and understand what's going on, let's say on the 15-minute time frame, to see if I can build a picture to potentially start, let's say, trying to understand if price is looking to turn around. And then the final piece of the puzzle is, well, does it make sense to take that long position? Well, at the moment, we can see, based on the daily, based on all price actions, or rather all time frames, that we are incredibly bearish. So much of the same applies in regards to what we've discussed earlier. As a result of the low being created from here, we've got to make our way back up and understand where that higher low, where that lower high has come from. Therefore, here remains a structure point. So any long position I take is an aggressive position as a result of not awaiting structure points to be broken. By the time this structure point is broken, I will already be gearing up for a better looking short position anyway. Hence why it would make good sense for me to wait for at least a bearish 15-minute candle closure from the area, despite my initial aggression that I want to take that short as soon as it gets there, because we would have now broken 15-minute structure to the downside. But based on the higher time frames, which takes precedence over the lower time frames, in my opinion, in my technical analysis, I'd be quite happy still to take this short position. However, what the point that I'm making is taking a long position at the moment is a risky position, despite price coming into a fabricated area and price being held at that area. There are no structure points for us to work with at the moment, because we can quite clearly understand that an area in the market that caused a low is from here. Therefore, this structure point in the market is simply based on lower time frames. And if you were looking to take an aggressive type of reversal position on AU, in my opinion, it would make absolute sense at least to wait for this structure point to be broken in the market. Then once price returns back down to your point of interest, I'll be looking to identify if there is a 15-minute order block down at those lows. And then only I would still be required to wait for an entry criteria. I wouldn't be taking this immediately, or my most reliant entry criteria, because after, if I draw this again, after a low, we are definitely expecting a pullback for a lower high before a lower low continuation. Therefore, any long positions become quite risky based on the fact, as I've said 3 times over, we don't have a full break of structure on that lower time frame. So AU, despite rather, I would like price to pull up to these areas to take that short position. I can quite understand why it may not, well, why I personally may well not be in that long position to take price back up to those highs. However, I'll certainly be looking to take it short if price gets there. So I hope that makes sense in terms of just because we understand where we want to short from, doesn't necessarily mean that I need to be the one taking price back up to that desired area. I've simply got an alert up at these highs, and you'll see I don't have an alert of price actually crossing up because I'm not interested in taking the buy at the moment. However, I'm very interested to see if price is going to break these lows further, because what that would mean for me is that price may not return sooner rather than later, and I'm going to have to react slightly quicker. And what I mean by that is based then on 15-minute time frame, we would have made a low, potential lower high for that lower low. Once price pulls back up into this area, hopefully we would have broken this fabricated 4 hour order block that I've placed in the market, and I'd be able to take benefit from the continuation based on what the 4 hour is telling us, what the daily is telling us, and also what the weekly is telling us. So despite price may well not come up to our higher point of interest, if we just flip the script and we'll do something like that, that would make a hell of a lot more sense as opposing to trying to buy. So I hope that makes sense, team. So I'm definitely looking for shorts. I'm short focused. And certainly the long positions I'm not interested in at the moment. It will be a completely different game when price comes down to these areas. So I will put an alert there so I don't forget in the future. But nevertheless, that is based on, if you look to the bottom right hand chart, we can see a daily order block there. So straight away, this 4 hour order block is definitely in the middle of nowhere, and I don't have any reason to be looking for a buy from that area. It's just a good illustration to show you guys the difference between searching for positions and making it make sense, or actually waiting for positions and then making it make sense, because we can all tell stories on with trading, and we can all enter positions based on a story that may or may not really make sense. It just depends if we have made it make sense. So I hope that makes sense. So from this area, the reason why this order block is of good use is because we were making higher highs, higher lows, and we have made a higher high. We have made a higher high, and now once price then returns back down to that order block, I'm not necessarily expecting a higher high, but I am expecting a rejection. And that is good enough for me to seek to go to break even. So that's the plays today. Looking for short from the better area. Then I'll revert to 15-minute price action if we continue to break those lows, i.e. snap lows, pullback, simple basic structure, and price action looking trade. Down into this desired area, down at the lows if I've refined. You can see just here, that is this position here where I'll be looking for price to turn around, and then we'll have a reaction towards the upside. And in the immediacy, that would be that would be removed, and I'd consider a long position only from here in the market. So that is AU. Nice looking position, AU. And then with that said, I wasn't able to capitalize on any of what I've already spoken about because my dynamic hasn't changed, my strategy hasn't changed. Price action simply didn't return for me. So, where are we again? US dollar CAD. If we revert back to the DXY, expect potential weakness from the DXY, but we can also understand how we could be wrong. Look at US dollar CAD. It's exactly the same. So if we start that weekly time frame, top right hand chart, we are refined within that weekly order block. Now, of course, weekly order block, I'm looking for price to reject that weekly order block. Once I've refined those areas down, then I'll be looking to take a position from those refined areas once I get my setup and entry criteria. Now, if you look at, and again, higher time frame price action, I'm not really interested, but if you can understand it and read it, does it make sense why you can be wrong? It's good to have that in your expectations because it just shows that the position that I'm looking to take could be wrong, despite wanting to take a position despite trading, I think it's great to understand that the position that I'm taking can be wrong. And the reason for that is it just makes you manage your risk. Knowing that you're going to risk money and you could potentially be wrong, then just manage your risk correctly. And it's as simple as that. That's trading, right? So, why am I saying that I could potentially be wrong here? Now, were making lower lows. Where did that lower low come from on the weekly time frame? In my opinion, it came from this area. So I was expecting a lower high for a lower low continuation. What did I get instead based on price action? I got a break of the most recent lower high, creating a new high in the market. Then I was expecting price to come back down to a point in the point of interest in the market and create me a higher high. We could now be in the phase of creating a higher high, just like on the DXY, just like on UJ. And you can see based on my illustration here, where I believe price may look to gravitate towards before making that bearish move back down to the downside. Now, with that said, just like on the DXY, despite my thought process of understanding I could be wrong, I need a weekly candle to close fully above that weekly order block before I can look to explore long positions on US dollar CAD anyway. So therefore, I'm going to revert to my technical analysis, stick to it, and back it. But does it mean I now need to take a short position immediately on US dollar CAD? Absolutely not. And the question is, well, why not? Well, we're bullish, and I need to wait for some structure points in the market to be broken before I either take an aggressive type of position on US dollar CAD or my most favorite type of my most favorite type of position, which would be a clear break of structure. Now, if we're moving towards those highs, I need to identify the most recent high low in the market. Therefore, I now know if I want to take the best type of position on US dollar CAD, I need to wait for this to be broken. And it's as simple as that. With that said, if we revert to the 4 hour time frame, look at the performance of the 4 hour 50 EMA. So I now know I have a range if I want to take it aggressively without waiting for a break of structure. I also now know that the better play would be to wait for that 4 hour 50 EMA to be broken to the downside. And then what I would have is a break of structure of the 4 hour 50 EMA where price is respecting beautifully. So once I have that 4 hour candle close below it, I have a good tick in the box to say, well, we are no longer respecting that weekly 4 hour 50 EMA. Excuse me. We're no longer respecting the 4 hour 50 EMA. So what I'd be expecting from there is that would be for me a break of structure, more than likely as a result of breaking our most recent higher low. I then expect to pull back up into an area of interest and I'll be shorting it back down. Not only would I know, well, not only, but I would no longer be using the 4 hour 50 MA as a target. It would be used more so as a confluence, and I'd be looking to take that position perhaps down to the weekly 50 MA, which is our most recent hurdle as a result of price now has closed above that weekly 50 MA. So you can understand why short positions last week were very favorable. In fact, where are we? No, most recent weekly, the candle before last closed above. So we was expecting last week or the week before candle to close above. We failed to do so, which then incited some short positions or made us look for or short position setups on US dollar CAD. However, long story short, last week's candle closed above. Therefore, I'm expecting price to want to gravitate back towards that weekly 50 MA or the imbalance of that weekly 50 MA before then a potential push back up towards the upside. So it's looking all right. As I've mentioned, the best plays and the more aggressive play. As a result of sort of that, the bullishness that come out of the DXY, it didn't really leave behind any clear structure points that we can seek to manipulate anytime sooner rather than later. Aside from this in the market, so certainly on the lower time frames, or just even if you eyeball it now, we can see that we're in a bit of a range. It's nothing tremendously large, but we can see we're not making any. We're no longer trending as we as US dollar CAD has shown it can. Therefore, we can identify that. And what I'll be looking to seek is, can I get a break of that? Can I then get a pullback up into an area of interest? I would still be looking for my highest degree of entry criteria because, as I've explained previously already, if I zoom that to the left, our major or our key structure point is here. So any move short from this area could simply be higher high, higher low, higher high. Therefore, once price returns, I want to see a change in immediate structure to give me the confidence that I've waited for enough time, understanding already that it is an aggressive break of structure that I'm taking the short from. Therefore, this is incredibly imperative. Oops, that one will do it. This is important to wait for to safeguard myself potentially, well, to safeguard myself to the best of the best that I possibly can against that. And that's always the goal. So I don't mind US dollar CAD shorts. I'd be quite interested to take US dollar CAD shorts aggressively. That's fine, but I think this is very important to wait for. And we also just need to understand what's going on in the market. Despite being in that higher time frame order block, as I've said, we can understand why we could be wrong based on that higher time frame formation of price action. So US dollar CAD, I don't mind it. Would I take a long position? I would, but unfortunately, my best long position is going to be coming down from these areas, down from this 4 hour refined area in the market. I've then refined that down to a 15-minute order block, refined within that area, and I think this would be a nice looking long position as well. If we can get price to gravitate back down towards that weekly 50 MA, reject it for the week, reject the daily 50 MA as well. So as price starts to come down, this daily 50 MA will gently start to move up, and then we'll be using a large amount of confluence to take price back towards the upside. So that's US dollar CAD. Don't mind US dollar CAD at all. I think it's a nice looking pair. With that said, before I get off that, I'm going to need to put some alerts. So I'll put an alert of structure point crossing down. I'll put an alert meaningless rather, price just crashing up, and we'll seek to understand what's going on. So nothing for me until I have some breaks of structure at the moment. So that's US dollar CAD. GU, right, again, mindset. We believe that there could be a potential turnaround on the DXY. So DXY weakness would mean the pound is going to look relatively strong against a weak dollar. So, should I be looking for potential longs? Perhaps. Where could those potential longs come from? So let's have a look in the market to have a look. We have weekly time frame, weekly order block. Price came in beautifully, rejected it, and off it went. It's unfortunate. Price didn't return back up to those highs for a continued short. Nevertheless, what do we have? Last week's weekly candle closed below that weekly 50 MA, so that's very good confluence for short continuations. And I believe the short play would be the better position, despite what I think about the DXY. And that short position, in my opinion, is going to come best from up at these highs. However, I've not marked those up just yet in terms of a better position in and around these areas. I've still got my areas in the market that price failed to come up and tap last week that I was waiting for. It's unfortunate, but that's price action. I now have the confluence from what price has developed that price could well look to gravitate back up towards these highs. And again, as I always say, I'm not looking at this as double tops, triple tops, quadruple tops. I'm looking at that as liquidity areas in the market where the majority, once price comes back up to these areas, are going to be looking for immediate short positions. And we can all understand what happens there. Those immediate shorts run into profit. Price action is not accounted for, so they're entering on a higher high. Price then goes into profit as price simply makes a higher low. Price then crashes straight through, makes a higher high, takes the stop losses out, drives price back up into its much better area. We'll be sat there waiting for a price to make a lovely break of structure, and I think that would be a great looking short position whenever that materializes. It's just great that price has already developed for us. And again, here you see it, I've left it on the chart. Here, a low in the market was created, but we're seeing double tops, triple tops, quadruple tops, immediate short positions from those that just trade support and resistance in the market. Were straight away, price just crashed through like so. And price went, I was hoping at that stage, price was going to come back up to this area. and I was looking for a nice short position from there. It's unfortunate, price never came back up, but what we have is the same looking development of what price action occurred previously, which is good news. So that's the shorts discussed. The here and now, can we look for a long position? Potentially, in all honesty. I'm trying to make it make sense. And what I mean by that is I'm trying to support my reasoning for wanting to take a long position from this area. So the only bias that I have at the moment to take a long position from that area is starting from a 4 hour order block. So that's not the end of the world, but what I would have liked to have seen is to use this 4 hour order block based on a break of structure. So currently, it isn't. It is just a 4 hour order block in the market. And more often than not, as I've described in one of the other pairs we spoke about, it's not really enough to take a position from because if you just look slightly lower, now we're talking. We are refined within a daily order block. Then we start to refine that daily order block down, and then you have a 4 hour order block in and around the area, which makes it make sense. Currently, this is just a 4 hour order block in the market that is a resultant of a 4 hour candle, a bullish 4 hour candle that left the imbalance behind. So it's fine. We can understand it's not the best position in the market. Now, when I refine that area down, I woke up this morning and I saw that the 15-minute order block was respected literally to perfection, which you just have to laugh sometimes about why some people don't trade smart money concepts. Because, I mean, why would price just stop dead there? It's quite self-explanatory that this is a very fruitful trading method. So, can I reuse that order block? The answer is no. I've just kept it on there to give you guys a good example that the refined 4 hour order block that was put in, I guess, quite pointless or aimlessly, refined area down, 15-minute order block to the left, price respected it beautifully, and off it went. Nevertheless, that 15-minute order block or that 15-minute price action hasn't done anything in the market, in my opinion, just yet. We can see, much like on the previous pair, US dollar CAD, we are, I wouldn't call it a range, but we're just not doing anything at the moment. Therefore, if price action isn't doing anything at the moment, should I be trading it at the moment? The clear answer is no. I've got no reason to be looking for a long position. And much like we spoke about earlier, despite understanding that the better formate or the better trade would probably come from up at these highs, it doesn't necessarily mean it's going to be me to be taking price up there. Again, price action, lower low in the market, breaking structure points to the left. Many, many, many breaks of structure points to the left. So this is a clear low in the market. Where did that low come from? Up here. Therefore, here is the lower high. Therefore, price action, even if price moves off, even to this distance, we're just in the formation of making a low, a lower high for a potential lower low continuation. So again, good looking price action, but you can really, really, really understand where you could be caught off guard. And again, I don't mind being wrong. I hope price moves up to these highs for me to take a good short position down, but it's probably not going to be me to take that long position for a multitude of reasons. Weekly candle. We close below that weekly 50 MA. So I am ordinarily expecting a rejection from that weekly 50 MA to the downside at some point. The higher price moves, the more I'm expecting that rejection. So I don't really want to be longing into a criteria what I'm expecting rejection to the downside from. I just don't fancy it. I don't think it would make sense to take a long position just yet, personally. Now, something that I may well consider is a long position from a better refined area in the market, which would be to the left here, that 4 hour order block that we spoke about before. With that said, by the time price gets down here, the question I need to ask myself is, well, have we already rejected that weekly 50 MA and we're making the low? Now, can I trade against my bias to then potentially at least move towards break even? It might be something to be considered. But I think GU is stirring up a little bit too much conflict to take a long position from despite having those points of interest in the market. So what I'm probably going to be doing is sitting on my hands. I mean, the way that this could be manipulated is a break of structure, wait for price to come back up into a point of interest, and in my opinion, wait for structure to continually develop. Therefore, you just get that confirmation. Nevertheless, an aggressive way to take that is just as I've described, break of structure, point of interest down at these lows, and then I would certainly suggest waiting for a change in character again, or just a break of structure, how I like to describe it, before then looking for the long back up to those highs. But be very mindful that you are already trading against that weekly 50 MA. That price is looking to reject to the downside. So seems boring, team, but my favorite position is going to be a short. However, price wants to get up to there, that's where I want to be trading from. Anything else is something that I'm just going to have to reanalyze once it starts to develop. But as you'll see, no alerts on here at all, because I don't believe price is going to get up here today. But what I will do is put an alert there nevertheless. And that's really all I'm interested in on GU. What I will have is an alert as price seeks to move down towards these areas. Let's just have a look to see what's going to happen. If the DXY continues, respects that weekly order block and moves towards the downside, then of course GU is going to rocket up to these highs for a potential short. If we are correct in our incorrectness on the DXY, and the DXY just continues moving towards those highs, then we're going to start excuse me, we'll start to bring into these types of positions where we'll be looking to get those continuations using the weekly 50 MA as our confluence for wanting to go short. So at the moment, GU is definitely not one of my favored looking pairs. It's definitely a favored looking short, but where price is at the moment, I think it's stirring up a little bit too much conflict. But so that's GU for me. I'll update you guys as and when I'll be looking to think about anything else on GU, but nothing for me personally. EU. Let's have a look to see if it's slightly different. EU. What do we have with EU? Weekly time frame. Where are we? Nothing in terms of weekly order block, but again, like on GU, we are rejecting that weekly 50 MA towards the downside for this week at least, as a result of that weekly candle closing below the weekly 50 MA, of which price was recently respecting the weekly 50 MA to the upside. So the opposite has now happened. Got that break below, expecting price want to gravitate back towards the imbalance above before rejecting that weekly 50 MA for the next next 5 trading days. So anyhow, where are we on the daily time frame, since there's no order block selection to use on the weekly time frame? We're in a nice daily order block, expecting price to want to potentially reject it for at least the day. So I now know that so long as price action is within that weekly order block, I'll be looking for a long position out of it. Now, the reason why I like this a little bit more than GU is because I have range back up to that weekly 50 MA, of which I would be expecting a rejection from. So there's a couple of quite criteria I think are quite important that we'll get to. But the thing that I'll just continue with at the moment, so that daily order block, even if price starts to trend below that daily order block, let's say today. So here's the daily order block. Even if price starts to do this today, I'm still expecting that daily order block to want to reject for the day, which would mean I'll be left with a candle, hopefully, to a wick to the lows. So that is what I am anticipating if price doesn't respect that the daily order block on the lower time frames. I still have the expectation based on my strategy that we will reject that order block for the day. So at least for today, I am long biased from this area. That's fair to say. Once we start refining this daily order block down, let's have a look to see where we are. There's a 4-hour order block right there at the lows. So again, look how price has respected that 4-hour order block pretty much to perfection. Therefore, I am keeping that on the chart to understand, can I see any further reaction coming out of that 4-hour order block, which is refined from the daily. So it makes sense at the moment. So now, different. I'm not comfortable trading GU long, but I would definitely consider taking an EU long. And the reason for that is at the moment that's as described. So as I start to refine that 4-hour order block down, I am here on the 15. So price again, once we refine that 4 hour order block, as I said, where are we? Where are we? Mind your eyes as I zoom out. Okay, let's just make it bigger. Here we are. The absolute lows of the daily 4 and 15 refined. Price came into that area last night and respected it to absolute perfection. Therefore, I I kept it on the market just for illustrative purposes, but it's not an area that I can now reuse because I want to see what's going on. Yes, we have respected it, but have we done anything from that area? At the moment, no. I recognize if I do want to get in this trade, it will have to be probably sooner rather than later because I know my range is quite limited only to that weekly 50 MA. Of course, I'm expecting a rejection from it, but for the week. So my target in terms of that position, it isn't the 50 EMA, but I know I need to manage price before I get there because I expect price to want to gravitate up towards here, and then the rejection for the week will come from the liquidity area above. And if I draw the weekly candle, this is what's going to happen at the moment. So the weekly candle's down here. As we push up to that weekly 50 MA, we'll get a bit of movement from it. But I'm expecting, let's say, Tuesday, Wednesday, Thursday, price to want to get up to these areas. And then Thursday, Friday, I'm expecting the rejection of the weekly 50 MA. And then if we can have this by way of weekly candle, then that's going to push us nicely into profits on the way up, take us nicely into profits on the way down, and then the strategy will be fulfilled by way of this wick rejecting that weekly 50 MA and the candle itself, or rather the body candle itself, closing below that weekly 50 MA. So I think EU is a bit of a firm favourite for me, long and short. Either way, I don't mind. I just need to see some confirmation first and foremost on that 15-minute time frame before I want to get excited about long positions. And the shorts, I think the shorts speak for themselves based on the overwhelming, but excuse me, structure on the 50 on the time frames, particularly the 4 hour, as a result of price not making lower lows and lower highs. We've had a breakout of the range, expecting price to want to return back to liquidity up at those highs before a continuation short. So I like EU either way. Definitely a favorite today. How am I going to look to attack it? Well, can't do anything just yet because I don't see any structure points that have been developed in the market for me to get excited about. However, what I can see here is a push, higher low, potential higher high, higher low area. We haven't broken. Therefore, new Blimey, can't get my words out today. Nevertheless, structure point in the market. I will be waiting, hopefully, for this as drawn. As drawn is how I'll be looking to take that. What do we have? So that was price action coming into that 15-minute order block. Has there been a 15-minute order block left behind as a result of most recent price action pushing away? Yes, there has. So here is the order block that I'd be desired to take a position from. However, I do really want price to break up first and foremost, come back into that order block, and I'll look for a long position. So I really, really, really do like EU. Structure point alert broken, pullback alert as price seeks to come back. And I'm going to take that as a long position today, hopefully, if price returns. The only caveat to that is if price comes back up, if price breaks and touches that weekly 50 MA and then comes back, I'll have a couple of questions that I'll need to answer because I don't know when price is going to reject that weekly 50 minute. It could reject today. It could reject the last 10 minutes of Friday's price action. 10 minutes to 11 on Friday. We could reject the weekly 50 MA then from the highs. The only problem I have if we tap it first and then come back, I don't know if that is us rejecting that weekly 50 MA and then I'll be trading into an EMA that's already been rejected, which I don't like doing because my bias will then be, well, actually, instead of this being a decent long position, what this could be is good confluence to actually lower high, reject the weekly 50 MA. That's good confluence for a lower low. So therefore, these areas become a little bit more riskier, and I'm going to need to wait for a lot of confluence here before looking to take that long position up. So Lots to think about, but definitely I like EU, certainly more than GU. GCAD, final pair of the day. GCAD, GCAD. At some point, I will grab you GCAD, and you AU, but nevertheless, nothing at all in the weekly time frame. We're just manipulating wick imbalances that played out quite nicely last week. I think I took a position on G. In fact, I'm pretty certain I took a position on GCAD, using the wick imbalance, using a lower time frame break of structure here, and I had that move. Well, not all of it, but definitely at least down to this structure point where I think, well, perhaps as a result of that high we have now made. Price now come back up, took the short position. I wanted to be out of the market by here, so that was the position. Nevertheless, here and now, where are we? Nothing on the weekly. Weekly 50 May, just to think about. Price has good range down to that for the week before rejecting it back up to the upside. Wick imbalances, hoping that price may well want to gravitate slightly higher. Use wick imbalance of last week. You can see it just here. Wick imbalance to me shows liquidity, telling me where price doesn't want to break above. Therefore, if I highlight that area, superimpose it on the lower time frames, we're here, a refined area in the market where I already want to trade from. Therefore, it is a high confluence area for me to want to take a short position. So that's fair to say. Daily time frame, there's just that daily order block as a result of business closing on Friday, bearish. Well, yeah, it's a bearish engulfing candle, let's call it, and it left us with a daily order block behind. Once I superimpose it on all intervals, you can see straight away that will start to refine that daily down into the 415. We are by previous weekly high wick imbalance, so it's definitely an area that I want to be taking a short position from on GCAT. That's pretty much self-explanatory. The only caveat is, unfortunately, higher high, higher low, higher high, potential higher low, higher high continuation. That's trading. We need to understand the risk before taking a position because that forces you, for those of you that don't manage risk correctly, that certainly will force you to manage risks, recognizing that you could be wrong based on technicals. You could be correct based on technicals, but in fact, I can also be wrong based on technicals. Once you understand that, simply manage your risk and seek to take the better looking positions. Like me today, GU is red, EU, I love it. And they are correlating pairs, right? So do the work. Now, refined area, we know we've got that 50-minute order book. We're up at the highs. I'll show you that right there up at the highs. That's where I'm waiting for price to pull back into before I can take a good looking short position there on GCAD. I like it. Now, why I like GCAD is at least for the next 4 hours, our price has now closed below that 4 hour 50 EMA where price was respecting it to the upside. So we've got good confidence at the moment for price even to take that short based on the 4 hour 50 EMA. So hopefully if we get a tremendously large 4 hour candle, probably to match that imbalanced 4 hour candle that we had on Friday, what I'll be expecting is that rejecting it to the downside and then would have a wick to the highs like so, be left with a nice looking doji, rather bearish candle closure. That's the thought process. A little bit far-fetched, I understand, but that's the strategy nevertheless. If, on the other hand, price then 4 hour candle close above that 4 hour 50 MA, as opposing to use a 4 hour 50 MA as confluence for the short, I'll just have to use it for a target for the short, which is fair to say because if we look at how the short position could materialize, we'll definitely have good range back down to that 4 hour 50 MA. Anyway, regardless of how you want to paint the picture, it looks good enough for me. So again, out of all those pairs, GCAD is looking nice as well, alongside EU, even alongside UJ to a certain extent. I like the shorts a lot. In terms of the longs, well, you can see refined area here based on the 4 hour time frame. Again, kind of clutching at straws a little bit, hence why I've not extended it the whole way across the chart. But if you bear with me, let me explain the reason why I put it in the market. We were making lows in the market. As a result of whatever happened, we made a high that high all the way down at these lows. We're refined an area down here, which also could be interpreted as a bit of a random area in the market. Nevertheless, it's around that weekly 50 MA for good confluence, but a high breaking most recent structure points, higher low now confirmed as a result of higher high. Therefore, here is a structure point. Where there's a structure point, more often than not, there will be an order block. Therefore, this order block for me becomes quite valid. So if I bring that to most recent price action, you can see exactly where we are. here around the daily 50 MA, also supporting long positions toward the upside. Why? Well, what's the performance of that daily 50 MA? Price is remaining above it. Therefore, if price comes back down to it, I'm going to have the expectation based on strategy that price is going to remain above it. Simple as. Therefore, can I look to find an area in the market which makes sense to take a potential position from? I think here is at the, I won't call it a valid position, but it certainly is a point of interest that will grab my attention when price starts to gravitate down towards it. Then I look to refine the area down in the market. Can I have a 15-minute order block in there, please? And if I just make that bigger for the final pair, we'll have a good look. We can see refine within that 4 hour order book. That makes sense. We do not have a 15-minute order book. But what we do have is one that has been mitigated. Therefore, for me, when price gets to here, it tells me that I cannot be looking to take any immediate positions. Why? Because I don't have a 15-minute order block. Therefore, I'm going to need to be waiting for one to be created. 15-minute bullish engulfing candle. That certainly will leave me with a 15-minute order block left behind. And then I'll be able to exploit that as price comes back down to the area. In addition to that, I do have a 15-minute order block right down at these lows in terms of session lows that you could argue cause that move. Therefore, if price wants to come back down to that area, I have an expectation for me to be able to at least move to break even, as I keep saying. So, and with that said, but the question I'll get is, well, that's not within the 4 hour order block. Well, hold on a moment. If we have this is me drawing the 4 hour candle now. If price pushes down into that 4 hour order block, let's say we've got an hour left of the 4 hour candle. I agree. Once price is here, 4 hour candle is below 4 hour order block. But much what I continue to say about EMAs, it's the same on order block selection. I have 4 hours for price to reject that 4 hour order block. If price in the last 10 minutes of the 4 hour candle goes from here and pushes up here, we have rejected the 4 hour order block because we'll be left simply with a wick and the body is going to be above or at least within that 4 hour order block. So this 15-minute point of interest is actually very, very, very attractive, in fact, because we're going to have kind of double the confluence. Not only are we within the 4 hour order block, we are even beneath it, giving us the confidence that the 4 hour candle should look to reject that 4 hour order block by the time price gets there. So again, another good looking pair that I'll be looking to manipulate, hopefully at some point today or throughout the rest of the week. So that will be the roundup. GJ, nothing really too interested on GJ. I'm still just going through the motions and testing out GJ as a result of no longer trading EG. So that's the rundown team. Lots to think about. GCAD definitely a good looking favorite. EU definitely again good looking favorite. Don't mind GU. Would have to look for the. I'd be more interested in the shorts nevertheless. UJ not bad either. I'll be looking for the short based on can I understand if the DXY is also ready for a short. AU looking for short positions as well. If we don't have price to pull back up into these highs, going to just simply revert to 15-minute price action, see if I can get a break, snap in the market, 15-minute order block, retest short. So I think it's all looking for a pretty good week, team. Claude, I will thank you personally for joining today. I hope you've enjoyed the breakdown, and everyone else in Frgnt Mastery. I hope that breakdown has made sense and will help you for today and the rest of the week. You shall hear from me soon, everyone. Do take care. All the very best. Thanks for joining, Claude. All the best.